Hey guys, so today's topic is stock market investing for beginners in 2019. I will be going over all of the top questions that beginners have in investing in the stock market and show you step by step how to get it started. All right guys, so number one, what are stocks? So basically when you buy a stock, you're buying a piece of a company, a very small piece of it. So if you buy one share of Apple, pretty much that means that you're a small owner of Apple, which is traded on the stock market. The stock market is open between 9:30 a.m. to 4 p.m. Eastern time. You can have extended hours, so you can have it pre-market, which will be 9 to 9:30, and then you can have aftermarket, which is 4 to 6 p.m. Some people have a little bit more extended hours, but that will be until 8 o'clock, 8 p.m. Eastern time. Now, the only thing is with these extended hours, the volume is very low, which pretty much means that volatility is very high. So not that many shares are being traded during those times. So if you're buying a lot, or somebody is buying a lot of them, the price can fluctuate very quickly up or down, and it's very kind of like dangerous. So not many people trade during after hours. Most people just trade during regular hours, but that is a possibility if you have it. All right, guys. So number two, the question is how to buy a stock. Well, to buy a stock, you're gonna have to either get a, you're gonna have to get a brokerage. So you're either gonna have to go on a website like Fidelity, or you can get an, on your phone, you can get Robinhood. Robinhood is what I use pretty much for trading. If you want to use Robinhood, which is something I recommend, there will be a link in the description. If you use my link, we both get a stock, a free stock, worth between $5 and $500. Now, the good thing about Robinhood is there are no commissions, which is great for new traders, because if you're making a lot of trades and you're like learning, you're not going to have to pay, let's say, $3 or $5. Some charge even like $7. So Robinhood is a great way to start. It's very easy. On Robinhood, literally you find a stock you want, you press buy, and you swipe up, you put in the price you want, and you have the, you get that stock, you buy the share. So Robinhood is very easy and simple to use for beginners, and that's why I recommend it. You know what else I recommend, and it's free? Well, smashing that like button, because it only takes a second and it's free. It's not going to cost you anything. It's going to help my channel out and help me grow. So I'll really appreciate that. All right, guys, number three, what strategies can you use and how to make profit? All right, so the first way I'm going to talk about is short-term investing. Short-term is pretty much, holding for less than a couple of minutes or maybe a day or two. But if you're doing like penny stocks with this, it's very dangerous because penny stocks are very volatile. They're pretty much worth a couple pennies up to $5, maybe $10 stocks. And you can be in and out within 30 seconds. I've made a lot of money with that. I've also lost a lot of money with that. It's very dangerous because anything can happen, because they're so cheap that if you buy a lot, if you have a lot of money, it can drive the price up really quick, or it can crash the price real quick. So it's very dangerous to do this. All right, so the second way of investing is pretty much long-term holds. What long-term holds mean is pretty much you're going to be buying stocks that are like blue chip stocks, let's say like Facebook or like Tesla. If you believe Tesla is going to be a huge thing in the next 10 years, you're going to be holding this stuff for like 5, 10, 15, maybe even 20 years. Now, if you really look at it like Amazon, imagine if you would have invested into Amazon 10, 15 years ago, compared to right now, you would have made so much money. And that is pretty much what long-term investing is. You're going to be holding through the dips, through the peaks, everything that happens with the market, a recession, whatever goes on, you're just going to keep holding, maybe even buying more, averaging down your price, cost. So you just keep holding for a long time, and then maybe when you retire or when you need the money, you go ahead and sell all that stuff. But this is proven to be one of the safest ways to invest. All right, the third way of investing is pretty much making like a high dividend portfolio. Now, what this means is you're going to find stocks that are paying out a high dividend. So for an example, let's say the stock is worth $100 and it pays a 7% dividend. Well, pretty much the company is forced to pay that 7%, which means on $100 you make $7 every year on that stock, which is the 7%. Now, stocks like this, you would want to get into like a REIT, like, an example would be O, the ticker symbol O. They pay a pretty good dividend, and they invest in, they buy properties pretty much. It's a real estate investment company, and you get paid for certain amounts, which is like probably like 6%, I believe, maybe 5% for that stock. Don't quote me on that one. You're going to have to check that one out. But dividend stocks you just hold, and you get paid that dividend monthly or quarterly, depending on what type of dividend it has. But those are stocks you just hold for a long time as well. Now they can go up and they can go down. They're not like blue chips where it's kind of more safe. So anything can happen with these. All right, guys. So number four, the fourth topic is going to be how to do your taxes. Pretty much people say, how are we going to be taxed on our profits or losses? What do we get money back? Well, here's your answer. So if you're doing short-term holds, which is, selling within a couple days or hours, well, on that one, you're going to be taxed at a higher tax bracket. You're going to be whatever bracket you're in for your job, that's what you're going to be taxed at. So if you're making a lot of money and you're like paying 25-30% on your taxes, that's how much taxes you're going to be paying. If you're doing long-term investments, which is a year or longer, you're only going to be paying about 15 to 20%. It all depends. It's usually closer to 15%. So if you hold longer, you pay less taxes. And if you're doing dividend, if you're getting a lot of dividends in your portfolio and you're getting a lot of money from the dividend, you're going to be also paying about 15 to 20% on those, which is, a lot better than doing the day trade. So day trading is typically the worst one because you're gonna have to pay a lot more taxes on it. So it's always better to hold long term or do some dividend stocks. It's not that bad. Now, if you lose money in the stock market, you can file that on your taxes and you can get a little return. It's not much, but it still gives you something back. All right, guys. So number 5 is how much money should I invest into the stock market as a beginner? Well, pretty much this is my opinion, so I'm going to be telling you guys what I think. I think as a beginner, you should probably first get Thinkorswim. I'll put a link in the description to the Thinkorswim, and basically you're going to be paper trading. So on the account, they give you like $200,000 or something, and it's fake money, it's not real. And pretty much you're going to be practicing to see how well you're going to be doing. So just practice that for like 2 or 3 months, see how it goes, if you made money or you lost money. Once you feel comfortable in investing, use whatever brokerage you use. If you use Robinhood, go ahead and use Robinhood. Maybe put like $500 or like $1,000 into it and then start trading. Your emotions are going to be a lot different when you're trading your real money. You're going to be panicking. So that's where you're going to see if investing is really for you, if trading, the stock market is for you, if you can handle it. If you can't, maybe it's not right for you and maybe you should just get out. But if it's working out for you, then you can add more money in the future and keep going and making more profits on your, investment. All right, guys, number 6, which is the last question, is it worth getting into stock market with small amounts of money? And my personal opinion is, yeah, it's worth it. Even if you have $100 or $200, or $500 or whatever, it's worth it because you're going to be learning and you're going to see how your emotions are getting, worked up as the stock is going down or if it's going up. And over a long term, the stock might go up 20, 30, 40%. And, if it goes up 50%, maybe even 100%, you never know. You could double your money and it's still a few $100s, and pretty much you're going to be learning from this. It's a learning curve and it's going to be a positive thing. You're either going to do well or you're going to do bad. Now, as Warren Buffett says, the best time to start investing was yesterday, and the second best time is today. So pretty much, start investing if you really want to get into investing. It could go well for you. You never know what can happen. All right, guys, so I hope you learned something from this video. If you did, go ahead and smash that like button. Make sure you click that subscribe button and check out all my other videos. In the comments below, go ahead and write, when did you start investing if you're already investing. If you haven't started, tell me, are you going to start investing into the stock market? If you have any questions, go ahead and ask the questions. I will be answering every single comment. So let's stay, let's communicate. I hope you guys enjoy your day.